Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, January the 5th. And this is the first Wednesday that I've done a video in January, so Happy New Year. Hope everyone had a great holiday season. We have come into the year into a continuation of a crazy market, and no exception this day. As we had a Fed meeting, or FOMC, let me clarify that, FOMC meeting, and it was right, or FOMC minutes of the meeting, it was right here. And we got an initial little pop-up, and then a drop down, and then the waterfall started, and it's still going. We are at 46.86. This is the ES. Pretty big move here to the downside. And we have gotten used to in the last, 2-3 months, these wild swings, back and forth overnight sessions, even intraday. We've had, 100-point swings up and down, and 80-point swings and 50-point swings kind of become the norm. It's kind of dizzying trying to trade this market. Look at this. I mean, if you've been trading, you know this, but crazy intraday moves, and then it looks like we're going to rip, and here's a new all-time high here, and as soon as we hit an all-time high there, we fail. Interestingly, if you are outside of Simpler, that green line is a voodoo line, which is an Elliott wave line, and we came up and just barely tagged that line. See that level 48.0825, and that line is 48.08.96. So awesome call there on that level. We failed. When you hit those levels, typically they will act as big resistance. Typically you hit them a couple times before eventually going through. This time we hit and just immediately failed. Now this big drop here, of course, was today from the Fed. But and again, this is the ES/SPX. So I'm looking at the overall market, and the big question is, is this the start of something bigger, or do we have serious problems here, or what? And the answer is we don't know yet. Unfortunately, I wish we did. I'm beginning to believe that this was a big enough crack in the ice to cause a problem. But at the same time, I look at this and I go, well, we had it's kind of off here, but we had a 200-point flush down and then 200 points back up in about a week and a half, something like that. So maybe maybe we have a big bounce up here tomorrow and everything's great and we just keep on going. I don't know, giant question mark. But we have been taking out a lot of levels here that are pretty critical. The 4700 was one. We really didn't need to go past 47.45 right here, and we went straight through it. So I don't know if this turns into anything or not. We do have payrolls on Friday, which will be another big event for us, as far as economic news. But the reason that we came down so hard today is the Fed with the FOMC minutes. It is, I guess, becoming apparent that they're going to be more aggressive on raising rates and turning the spigot off for the free money, printing money, all that kind of stuff. But the crazy thing about it, if you know how this works, the FOMC minutes is essentially just a transcript of the last Fed meeting. So this is old news. The more of the reason, I guess, for the actual sell-off is the bonds. The 2-year Treasury yield jumped to the highest level it's been in like several years. 30 years down very hard. So bonds, everyone is anticipating these rate hikes, and now it appears they're going to be much faster, that type thing. So that is going to take the wind out of the sails of the big tech companies, Amazon, Apple, all that kind of stuff, Google, etc. The FANG stocks. Not going to be, it's not positive for the market. But if you are a trader, that's good news, right? Because we like wild swings. We like being able to, trade it up or trade it down and that kind of thing. And another thing to consider here is if we go out here on a 1-year chart, let's see, let's put a ribbon up here. This is pretty cool. So if you look at this, these are moving averages, right? And if you look at this, you see that little white line right there? We've just come back down to the mean. Basically, these are average true ranges. So we have 1 ATR, 2 ATR, 3 ATR. Here's -1, -2, -3 ATR. We've just come back down into the mean. And most of the time, when you come back down to the mean, you tend to bounce and bounce and bounce. And here, we even went through it here to -1 ATR and bounced. Here, if we come down a little bit more to 1 ATR, are we going to bounce like we have been? I don't know. I hope so. I don't really want this thing to turn into any kind of mess, but it might. So you have to be ready, willing, and able to trade these things on both directions, or sit on your hands in cash and all that kind of stuff. It's quite a different story with the Nasdaq. And again, check this out. So there's the Nasdaq, same thing. This is a 1-year chart on the Nasdaq. As you can see, the mean is right there, that white line. We have handily gone through that, and it looks like we're going further. Again, once you get to these -2 ATRs right here, or -3 ATRs, you tend to bounce. Typically you bounce off that stuff. So maybe this is just a blip on the radar. Maybe it keeps going. I don't know. Or maybe this is the start of a kind of breakdown thing. But let's just put a simple moving average on there. There's the Nasdaq. The one thing that we do have is in 2-3 weeks, we've got all the big tech earnings coming up. So generally speaking, I would think if we're going to bounce, we might bounce into those earnings, because Microsoft, AMD, Google, Apple, Amazon, Facebook, Tesla, all that kind of stuff. They well, not Tesla, but the others have come down, or actually in good spots for a potential bounce. Does that happen? They're down because of they are actually interest rate sensitive. So it's still, there's no way to tell, right? There's still just no way to tell. So again, we just take it very carefully and trade it one day at a time. If you've got long stuff, long stock or whatever, for example, I would protect those positions and be very light and very nimble. I say that all the time, but you always want to be light and nimble when you're trading. But this is a different ball game. We're getting into some very, very sketchy stuff here. So we could come back down to that 200-day there. We could come back down here. We haven't. Let's do this. Put it in perspective here. So it's a 10. Here's a 10, and let's do the SPX. It'll kind of make it a little easier to see. Here we're going. Then we go parabolic here. So we could have a pretty meaningful pullback here and still be in a very big uptrend, right? So, I am all about buying the dip, and I have been bullish up until today, and now I have kind of officially switched from bullish to neutral. I'm not eager to buy this dip, like I was, a week ago, 2 weeks ago, that kind of thing. And again, here's what we're looking at here. Actually, let me put it back to ES because it's easier to see on the ES. You buy the dip and you sell the rip, and you buy the dip and buy the dip and buy the dip here. I don't know. I just don't know. So again, be careful. If you're really not sure and you're not nimble, or you can't be nimble, or you just don't know, cash is king until this thing kind of sorts itself out. I think we might have some clues by Friday when we have payrolls, but I think more likely it's going to be 2-3 weeks until we get into earnings season and see how the earnings season is going to go before we really start getting some clarity on direction. So anyway, and I don't even have prices on the downside that we might go to. I mean, we have levels obviously much lower, but it's just a guessing game at this point until we see if we're going to continue to break down or not. So I hope that helps. It's mainly just a cautionary thing to say, be careful out there and kind of wait and see how this thing plays out, because these dramatic moves like this, like we had today, you don't want to get on the wrong side of this, so be careful. All right, guys. Well, thanks for the time. I appreciate it, and I will talk to you at the next update. Take care.
Without simpler trading, I could not have financial independence. This is one of the best investments that I ever made in my life.
It's helping me find consistency.
It's one of the things that won me